It's been 30 days since the federal government came out with their 5% housing deposit scheme, and this is the headline in the first month of its release. Housing values rise at their fastest pace in 2 years. Coincidence? In this video, I'm going to go through what is going on in the housing market to give this crazy headline. We're going to go through every state and you're going to get one clear message from this video. We are in the middle of an everything, everywhere boom. Every single housing market has just posted positive results. Nationally, we've just posted a 1.1% monthly growth rate. Extrapolate that out, you're talking about a 12% rise in house prices all across the country and over $1.5 trillion in wealth created in a single year right now. This housing boom is large and it has the scope to change the dynamics of whether you can afford to buy now or whether you're going to be locked out of the housing market for a period of time, because house prices are rising, they're rising quickly, they're rising everywhere, and they ain't stopping anytime soon. Let's get into it. So you have Sydney rising at 0.7% in the month of October. Melbourne has overtaken Sydney now. The momentum in that Melbourne market is here. We've been talking about it for a period of time, getting our clients ready for this Melbourne boom for a period now. We've talked about it at length, gone through suburb by suburb. The guys at Adelaide have done an amazing job at running through different markets where they are at different points in time and getting their clients ready for this Melbourne boom, which has just started. 0.9% in the month of October alone. Some serious momentum entering the Melbourne housing market now. Brisbane, Adelaide, Perth, the three darling cities that have been through this mega boom for a number of years, are accelerating again. You have Brisbane and Perth posting really strong numbers. This is the housing shortage. There are not enough homes right now, and at exactly the same time, the government's come out being like, here's a bazooka, go boom, go boom. Every single person, first home buyer, 5% deposit, go buy whatever you want. We will back you. We will guarantee the loans. We will make it happen. We'll act as the bank of mum and dad. You come up with 5% and we'll give you the rest. The banks are out there printing loans at the moment. Bank SLAs have gone out of control at the moment. One major bank is sitting there 2-3 weeks to approve a loan, and every single bank right now is sitting there with delayed SLAs. And if they're not, it's probably because they're pretty horrible at it right now. And if you go to our last video, one bank's just pulled out the white flag being like, too much lending flows. No, we just got to stop. It is absolutely bonanza there at the moment. At Flint Invest, our mortgage broking business, it is busier than ever. We've just posted the highest ever lodgement month we've had as well in the month of October. No surprise, it is an everything, everywhere, everyone boom right now, and different markets are absolutely roaring. Melbourne, huge opportunity for those that are looking to position themselves ahead for the period of the next few years and buy in a counter-cyclical environment, the market that hasn't done so well. Hobart is on the rise again as well, 0.3%. I've got my eyes on you, Hobart. I'm paying attention to your rental market. I am looking very closely at you, looking for trigger points to see when the timing is right and when the confidence rises as well, which is really interesting. We're talking about markets that are counter-cyclical here. Darwin, the darling city, the number one performer so far this year, the one we've been talking about for a period of time, saying that, hey, the run will start. The run has started. It is now going absolutely bonanzas. One of the highest performing capitals just behind Brisbane and Perth for the month of October, but the highest rise since interest rates cuts began in 2025. Canberra up 0.6% as well. What you can see here, this big summary position is everything all at once is rising. This tells you it is not just a local factor driving this. It is macro Australia-wide factors. You can't have Canberra rising, Perth rising, Sydney rising, all different markets driven by different things, but it is a macro factor. And one of the big reasons is increased confidence and a lack of housing supply all across Australia right now that's driving this everything everywhere, boom, so much momentum. And this is what happens when property investors come into the market. They come in a stampede, they go run, run, run. The neighbor goes, I want it, I want it, I want it. That's a property investor boom. And property investors are making up 40% of the marketplace right now, taking up anything and everything, everywhere and anywhere, being like, can I please have some property? That is the feeling that we have as brokers and anyone participating in the market. We've been talking about this will come for a period of time now. It is no longer a question of when, it is here. We are living right in it right now in one of the hottest springs in a long, long time. This is one of my favorite charts to go through when we're looking at it. So we've gone through state by state and looked at it. But one thing that I love to see is the change in house prices on these capitals at different points in time. So we've got two markers here that Cotality's come up with in their monthly report. Since February this year, the rate cutting cycle, you've got Perth, you've got Darwin, and you've got Brisbane really shooting the lights out. Darwin absolutely bonanza, but you have Sydney up 5% and Melbourne up 4% already as well. What this tells you is a really, really exciting thing. It's just like 4%. It's just like, yeah, I'm paying a little bit more today than I was at the beginning of the year. But at the same time, it does tell you it's fairly early on in its boom, especially when you look at the 5-year growth rate. Melbourne has only increased 17.6% in 5 years. That is horrendous performance over a fairly long period of time, especially when you see Sydney has more than doubled that. Brisbane has gone 4-5 times more than that. Adelaide, Perth, all the same thing. And you've had like this recalibration in the housing market where Melbourne was up here and then Sydney's kind of gone further and further away. And every other capital which was down here has gone up here and Melbourne's kind of stayed where it is, which has created this relative affordability principle. And now investors are back and investors don't care. They're not like, hey, I must invest in Perth, I must invest in Brisbane. They just don't care. They invest where the numbers make sense and they move their money around into the right location at the right time. That Melbourne housing market does look very attractive right now, especially with the boom that's everywhere happening right now and the momentum in the marketplace. So here you have a little bit of a breakdown. Hobart up 28%, Darwin 37%, Canberra 28%. The Darwin lack of growth, I know we've got 37% over the past 5 years, but if you go back 12, you lose this year's performance, the 2025 performance, you would have had it sitting down near the bottom with Melbourne. Darwin's now taking off because it was relatively so much more affordable and investors went there as a result. Just like the Melbourne story starting to take off as well, you'll continue to see accelerating growth rates in Melbourne as well. Let's go through the rental market as well, because the pressure, the housing supply shortage is apparent in the rental market too. We have rents recalibrating upwards. If you look at the curve here, it's just gone up pretty much in every single capital, both in houses and units. So the rental story is really, really attractive. Darwin spits out some really interesting information. So many more investors going there, house prices going up, but rental prices going up too. Hobart, such an interesting story because there's so much pressure in the rental market, up 7%. In the past 12 months, much of it more recently as well, but house prices aren't moving just yet, which is why I've got my eye on you, Hobart. That's the reason why I said it. And you've got Brisbane, Adelaide, Perth with really strong rental inflation too. Adelaide's very interesting because its vacancy rate is as tight as it's ever been, but its rental inflation has calmed down. It's hit that affordability limit. Adelaide is now cracked into that affordability limit and it can't keep rising because Adelaide renters cannot simply pay anymore, and so they've hit that ceiling. So rents are gently increasing now, which also puts a cap on the ability for prices to continue to grow at the rate that they've grown at over the past 5 years for the next 5 years. Adelaide will not perform that well over the next 5 years. Perth, meanwhile, has a little bit of a different one. It's not at its cap. It's got much more to go. People earn significantly higher incomes there. The yield is higher. The rental growth ability is higher. So, and the housing supply shortage is much, much tighter as well. Oh, it's very similar in terms of Adelaide. Like it's got a very tight housing market in terms of listings available versus the demand out there, but it doesn't have an affordability cap, or at least we're not approaching it yet. That's why I've kind of always been out there saying that Perth's got another like 10, 15, 20% to go, and with the rate cutting environment, you might want to even add another 10% to that. It has room to continue to increase. I don't think it's got the ability to double in house values from where it is at the moment, unless rents continue to explode, but it does have a bit more room, especially when you compare it to Adelaide and Brisbane as well. It is running really, really hot at the moment because of such a strong economy. It is approaching affordability limits too. It just hasn't cracked through them yet because there's so much heat and so much momentum there, and people are feeling so confident as well. So there's a little bit of a national wrap as to exactly what is happening everywhere at the moment. Okay, let's talk through some of the things you need to know for the period ahead as well. Will this everything, everywhere property boom continue? And what can we expect for the rest of the year and into 2026? Here's some of the golden bits of nuggets in this report that Cotality has come out with. Right now, we have house prices rising because we have housing demand up here, which is the big change. Demand has increased on the back of interest rate cuts. We also have housing supply down here right now. And when you look at the data, you can see the supply issue that we're going to live through over the next few years. We have a big supply problem here in Australia. Here's the numbers. Newly built supply remains insufficient. Dwelling commencements, so the number of homes we're building, remain 9.5% below their decade average, while completions, the actual number of homes that are built, is 15% below their decade-long average. But the problem is, we're bringing in more people. Australia is much larger. We're getting much more demand at the same time as not having as much supply. And this is the absolute mind-boggling part. The government has come out at exactly that point in time and said, first home buyers, we want to help you compete. Let's give you more money and throw in that bonanza into the marketplace at the same time. You combine all of this, you have first home buyers shooting up, you have an investor boom happening, and you have upgraders sitting on more wealth than they've ever had before, with this $1 trillion addition into wealth just this year alone, on the back of multi-trillion dollars over the last few years, all happening at the same time. This is the environment, the bubbling environment that's being created right now that's driving the everything, everywhere property boom that will either make you rich or, unfortunately, if you're not in the housing market, will keep you further entrenched, further and further away.